Welcome back, everyone. Today we're diving into the fascinating world where crypto collides with geopolitics, with a little bit of Solana intrigue thrown in for good measure. We've got a really interesting mix of sources for you guys today, a snapshot of the global crypto market, some pretty bold claims from recent news articles, and even a snippet from a crypto podcast that's, well, let's just say it has some strong opinions.
It certainly does. Always fascinating to see how different voices interpret the same events, especially in the crypto space.
Absolutely. And that's exactly why we're here today, to sift through all the noise and try to figure out what's really going on. So our big questions for this deep dive are, what's driving the crypto market right now? Is it all doom and gloom, or are there some glimmers of hope out there? And what is the deal with this Solana platform that everyone seems to be talking about?
Okay, well, why don't we start with that crypto market overview? Your source material includes a snapshot from the Blockchain DXB podcast. They paint a picture of a market down 3.6% with a total market cap of $3.16 trillion. Bitcoin and Ethereum are still the dominant forces, holding a combined dominance of over 70%.
But one thing that really jumped out at me was their claim that Biden's Ukraine policies are the full reason for the entire downturn. That seems, well, like a pretty bold statement, to say the least.
It does, doesn't it? I mean, while geopolitics definitely play a role in market sentiment, attributing the entire downturn to one single factor seems a bit oversimplified.
Right.
Traditional markets react to uncertainty as well. It's not just a crypto phenomenon. We have to remember that we're dealing with a global network here, influenced by everything from economic indicators to technological advancements.
They also mentioned that the current market sentiment is, and I quote, extreme greed. With all this talk of war and market downturns, does that even make sense? Extreme greed?
Well, sentiment can be a fickle thing, you know. What's interesting here is that extreme greed can very quickly flip to extreme fear, and vice versa. So instead of getting swept up in that emotional roller coaster, let's try to focus on the fundamentals, the technology, the adoption rate, the real-world applications. Those are the things that actually drive long-term value.
That makes a lot of sense. I know it's easy to get caught up in the hype, but keeping an eye on the fundamentals is key. Speaking of interesting developments, let's talk about the Solana scene. I was reading about this platform called Pump.Fun, and apparently it's been dominating Solana DX transactions for a while now, like over 60% for the past 3 months.
Ah, Pump.Fun. They've definitely been making waves. Now, for anyone listening who might not be familiar, a DEX, or decentralized exchange, allows for peer-to-peer trading of cryptocurrencies without needing a central authority. Kind of like a digital marketplace where you can trade directly with others.
Gotcha. So is this dominance a good sign for Pump.Fun? It seems like a lot of people are choosing to use their platform.
Well, it could be. But here's where things get interesting. Even with all those transactions, their trading volume share is actually lower. What this suggests is that while a lot of people are using Pump.Fun, the value of those transactions might be relatively small compared to other platforms.
So it's not just about the number of transactions, it's about the size of those transactions as well. That raises a question. Could this over-reliance on a single platform within the Solana ecosystem potentially be a red flag?
It's something to think about for sure. Diversity and healthy competition are usually seen as positive indicators in any market. Having too much weight on one single platform can create vulnerabilities. Imagine if something happened to disrupt Pump.Fun. It could have ripple effects throughout the entire Solana ecosystem.
Yeah, good point. Don't put all your eggs in one basket, right?
Exactly. It's a valuable lesson, especially in the world of crypto where things can change so quickly.
Okay, so we've got geopolitics swirling around, market sentiment swinging back and forth, and now we're talking about the potential risks of over-reliance on a single platform. This is quite the ride.
It certainly is. But that's what makes it so fascinating. There's always something new to learn, a new development to analyze, and a new challenge to overcome.
And speaking of new developments, I was really intrigued by 2 news items about companies adding Bitcoin to their treasuries. First up, we have Rumble, the video sharing platform, deciding to allocate up to $20 million.
Oh, interesting. Rumble's a platform I use quite a bit, so that definitely caught my eye. It seems they're making a bet on Bitcoin as a long-term store of value, possibly as a hedge against inflation.
And then there's Jiva Technologies, a Canadian wellness company, also joining the Bitcoin Treasury Club.
That's right. And it speaks to a larger trend we're seeing. Companies are increasingly viewing Bitcoin not just as a speculative asset, but as a legitimate part of their overall financial strategy.
Yeah, it's like more and more companies are saying, hey, we believe in this enough to put our money where our mouth is.
Absolutely, and that shift in perception is significant. It contributes to the growing legitimacy of Bitcoin as an asset class, which could potentially pave the way for even greater institutional adoption in the future.
So it's not just about individual investors anymore. We're seeing big players entering the game, which could have a huge impact on the market.
Exactly, and that actually brings us to another interesting development. Binance, the world's largest cryptocurrency exchange, recently delisted 5 tokens from its platform.
And at the same time, we have news from Morocco. After initially banning cryptocurrency altogether, they're now drafting regulations for the sector, seemingly unrelated events. But is there a connection here?
There is. What's fascinating is that both events, while happening on different sides of the crypto world, actually point toward the same underlying trend, the maturation of the industry.
Maturation in the wild west of crypto.
Now I'm intrigued. I know, right? It might seem counterintuitive, but we're seeing a shift from those early days of, let's call it, unfettered experimentation to a more structured and accountable landscape. Binance delisting tokens suggest a move towards self-regulation. Exchanges are starting to take a more active role in setting standards and ensuring quality control.
So they're kind of flexing their muscles a bit, showing that there's serious players who are committed to the long-term health of the market.
Exactly. And Morocco's change of heart, from an outright ban to creating a regulatory framework, signals a growing recognition that crypto is here to stay. But it needs to operate within some defined rules.
It seems like governments are finally realizing that they can't just ignore crypto anymore. They need to engage with it, understand it, and figure out how to create a system that allows for innovation while also protecting investors.
Absolutely. It's a tough balance to strike, but it's an important one. And these recent developments suggest that we're moving in the right direction.
Okay, so just to recap, in this first part of our deep dive, we've talked about market trends, the influence of geopolitics, the dynamics of the Solana ecosystem, and those early signs of a maturing industry.
And believe it or not, there's still more to uncover. We've only just scratched the surface of all this source material.
That's right. In the next part of our deep dive, we'll be exploring some fascinating initiatives from the UAE, and we'll take a closer look at the implications of those companies adding Bitcoin to their treasuries.
Welcome back. We covered some pretty interesting ground in the last segment, but we're ready to dive even deeper into all these forces that are shaping the crypto landscape today.
I'm particularly fascinated by that trend we were just talking about. Companies adding Bitcoin to their treasuries. I mean, Rumble and Jiva technologies are just 2 examples, but it really feels like we're just seeing the tip of the iceberg here.
Yeah, it definitely suggests a growing confidence in Bitcoin as a store of value. It's becoming more than just a speculative asset. Companies are starting to think long-term and incorporating it into their financial strategies, potentially as a hedge against inflation or economic uncertainty.
It makes you wonder, right? Like, will this inspire a kind of domino effect? Could we see a whole wave of companies following suit, especially if those early adopters see positive results?
It's definitely a possibility. As more established players embrace Bitcoin, it kind of further legitimizes it as an asset class, right? And this could lead to even more institutional investment, wider mainstream adoption, ultimately a more robust and resilient market overall.
Okay, before we get too carried away talking about Bitcoin, let's circle back to that Blockchain DXB podcast for a second. Their claim that Biden's policies are the sole reason for the crypto market downturn, well, it got me thinking, even if it's not the only live factor, those policies could still be having a pretty significant impact, couldn't they?
Well, it's important to keep in mind that geopolitics, including any policies enacted by major economies like the U.S., those can definitely create a lot of uncertainty in global markets. And crypto is no exception to that. Regulatory changes, sanctions, even just like the fear of escalating conflict, all that can spook investors and trigger those sell-offs.
Well, a ripple effect, right? Anxiety just spreading through the entire market.
Exactly. However, and this is important, we have to avoid just assigning blame or making any sort of predictions based solely on political events. I mean, the crypto market is way too complex for that. There are so many other factors involved.
Right. And actually, the podcast host also mentioned Trump's stance on those peace negotiations. And he kind of implied that, if Trump were to return to the presidency in 2025, well, that would be a really positive thing for crypto. But is there any historical evidence to back that up? Or is it just wishful thinking?
Well, while certain political figures or policies might be, perceived as being more crypto-friendly than others, history has shown us that predicting how the market will react based solely on political affiliation, well, that's a pretty risky game. The crypto market is influenced by so many things. I mean, Oversimplifying it to align with any political narratives can lead to some very flawed conclusions.
So basically, don't bet your Bitcoin on the election results. Got it.
Exactly. It's about focusing on uh, understanding the technology, those adoption trends, and the underlying value propositions. Those are the things that will actually help you make those informed decisions, no matter what the political landscape looks like.
Solid advice. Okay, so shifting gears a bit here, let's zoom in on those UAE initiatives that we touched on earlier, training 5,000 Emirati students in all these advanced technologies, partnering with leading universities for research and development. It seems like the UAE is going all in on this idea of building a digital future.
What's really interesting to me is that focus on cultivating talent from within, empowering their own citizens to actually become those leaders in this new digital economy. It's a pretty forward-thinking approach, right? And it recognizes that transformative potential of technology.
And that Cost University of Connecticut partnership, that one's especially exciting, don't you think? I mean, combining resources, all that expertise, cross-cultural collaboration, that's a recipe for some really groundbreaking advancements.
Especially with that focus on AI, clean energy, and health tech. I mean, those are all areas that are just ripe for disruption and innovation, wouldn't you say?
Absolutely. These are fields where technology has the potential to address some of, humanity's most pressing challenges. And by fostering that kind of collaboration between academia, industry, governments, it seems like the UAE is creating an environment where innovation can really flourish. And then, of course, those solutions can be scaled globally.
It's refreshing to see that focus on progress, not just profit. I agree. It highlights that technology at its core is really about improving lives and shaping a better future.
Okay, so we've explored a lot of those market trends, the influence of geopolitics, even got a little glimpse into the UAE's ambitious vision for the future. But before we wrap things up, there's one more piece of the puzzle we need to examine. Binance delisting those 5 tokens, and Morocco's, well, kind of unexpected move towards regulating crypto. They might seem like totally isolated events, but I can't help but wonder, could there be a deeper connection here, like a larger trend that's at play?
You're spot on. These seemingly disparate events actually point to a pretty crucial theme that we've been touching on, that ongoing maturation and evolution of the entire crypto industry. Think of it like a shift from, let's say, those Wild West days of unregulated experimentation to a more structured, responsible, dare I say, grown-up phase.
So less cowboy hats and more business suits.
Yeah. Huh. You could say that. But it goes deeper than just appearances, right? We're seeing a definite move towards what we call self-regulation within the industry itself, with exchanges like Binance taking a more active role in setting those standards and, ensuring that quality control.
So when Binance delisted those tokens, that was like a signal to all those other projects, right? Like, hey, step up your game or get left behind.
Exactly. And on the regulatory front, Morocco's shift, going from that outright ban to a framework for regulation, well, that's another indication of this whole maturation process.
Oh.
It shows a growing recognition that crypto is here to stay, but it needs to operate within, a set of rules to protect those investors and ensure some level of stability.
It's almost like they're saying, okay, we're not afraid of crypto anymore, but we're going to put some guardrails in place to make sure everyone's playing by the rules.
Perfect analogy. And that trend of increasing regulation, it's not unique to Morocco. It's a global phenomenon. As governments everywhere try to grapple with the rapid growth and the potential impact of, all these cryptocurrencies. So the big question for our listeners is this good news, bad news, or somewhere in between?
That's a great question. I'd love to hear your perspective on that.
Well, it's a complex landscape, there's no doubt about that, but I tend to see it as a positive development overall. Increased regulation, when it's done thoughtfully, well, that can actually foster greater trust and legitimacy for the entire industry, right? Which then, in turn, attracts more institutional investors and drives that mainstream adoption.
It's about leveling the playing field so that everyone knows the rules of the game and can participate with more confidence.
Exactly. And while some people might view regulation as kind of a threat to that decentralized ethos of crypto, I actually believe it's a necessary step for its long-term sustainability and integration into, the global financial system as a whole.
Like that old saying, right? With great power comes great responsibility. Crypto is becoming this powerful force, and it's time to embrace that responsibility and build a future where innovation and security can kind of go hand in hand.
Very well said. And as we all navigate this exciting new era, the key is to stay informed, stay engaged, and most importantly, stay curious.
I couldn't agree more. We've covered a ton of ground today, but the conversation certainly doesn't end here. We really want to hear from you, our listeners. What are your thoughts on all of this? What questions do you have? What insights can you share?
Just join us next time as we continue to explore the ever-evolving world of crypto, uncovering those hidden connections and deciphering those signals that will ultimately shape the future of finance and technology.
Okay, deep divers, we're back for the final stretch of our crypto exploration today. We've covered a lot of ground, that's for sure. From those market jitters to Solana surprises, we even took a quick glimpse into the future of finance.
Yeah, it's been quite a ride, and through it all, we keep seeing this common thread emerging, right? The crypto world is maturing and fast. It's more important than ever to stay informed and, adaptable.
Absolutely. So as we wrap up this deep dive, what are those key takeaways you really want our listeners to walk away with today?
Well, the first thing to remember is that the crypto market is a very complex beast. It's really easy to get caught up in those headlines, right? But it's so crucial to look beyond the surface, consider all those different factors that are at play.
So no easy answers, no quick predictions. It's all about connecting those dots, understanding those nuances, and developing a well-rounded perspective, right?
Exactly. And speaking of connections, we saw how those seemingly unrelated events like Binance delisting those tokens and Morocco, embracing crypto regulation, they actually point towards a much larger trend, industry maturation.
Yeah, it's fascinating how those pieces of the puzzle all fit together. It's almost as if the crypto Wild West is gradually transforming into a more structured, accountable ecosystem.
Indeed. And while some people might resist this shift, I see it as a natural progression. Think of it like building a skyscraper, right? You need that strong foundation, those regulations, and those responsible practices to actually support the growth and innovation that's happening up above.
That's a great analogy. It really highlights the importance of building a sustainable future for crypto, not just chasing those quick profits.
Exactly. And let's not forget about the human element here. I mean, investing in education, fostering those collaborations between, academia, industry, governments, that's key to really unlocking the true potential of all this technology.
Those UAE initiatives we discussed, those really stood out to me.
Hmm.
They're not just embracing the technology itself. They're empowering their people to become those leaders in this new digital age.
It's a great reminder that technology is ultimately about empowering people, solving real-world problems. And crypto, with its decentralized nature, that potential for financial inclusion, well, it has a huge role to play in shaping a more equitable and accessible future.
So as we conclude this deep dive, what is that one final thought you want to leave our listeners with today?
The world of crypto is constantly evolving, right? New trends emerge, regulations shift, technological advancements disrupt everything. So the key is to stay curious, ask those critical questions, and never stop learning. Embrace the challenge, stay informed, and never lose sight of, that transformative potential of this technology.
Well said. We've covered a ton of ground today, but, the conversation doesn't end here. We encourage you, our listeners, to keep exploring, dig deeper into those topics that spark your curiosity, and share your own insights and perspectives. What do you think?
Absolutely. Remember, the future of crypto is being shaped right now, and your participation matters. So stay engaged, stay informed, and stay tuned for more deep dives into this fascinating world of, blockchain finance and technology.
And that's a wrap on this deep dive. We hope you enjoyed the journey, came away with some valuable insights, and maybe even a renewed sense of curiosity. Until next time, happy exploring.